Jagannatham, Equity Head of SMC Capitals Limited, will be joining us from Delhi.
Welcome back. We have with us Jagannatham. He's the head of equities at SMC Capital, joining us from Delhi. Jagan, good afternoon. Welcome to Profit. Let's first start off with not the secondary markets, but the primary markets. The two important issues. One is the NMDC follow-on public issue, and more importantly, MRMGF has also received IPO nod from SEBI. Again, the company is tempting its fate once again, but given the recent occurrences in the real estate space, even the budget hasn't really been too good for this particular sector. What's the kind of response you're expecting for an IPO like MRMGF? The shares could be as high as about nearly 4,000 odd crores. Do you expect the stock to do decently well, given what's happened with DB Realty?
Yeah, I mean, first, as far as the NMDC is concerned, we are going back to the traditional book building procedures. So that is slightly better because the market is used to that, and investors will be feeling more comfortable with that. On top of that, even 5% discount to the retailers will be a big relief for the retailers because there is enough spread for them to play. As far as the MRMGF is concerned, not only that, almost there are 15-16 real estate IPOs in pipeline, ranging from Lodha developers and ranging from so many other companies. So it will be interesting to see how they pan out. DB Realty and Godrej Properties both could able to complete. So it will be an interesting trend to see, because almost all these real estate companies put together are planning to raise in the range of 15 to 16,000 crores. So that is a lot of money. Having said that, DB Realty and Godrej Properties could able to see decent response. So it all depends upon the real assets the company is having, because these days the institutional investors and the investor community per se are asking very inconvenient questions, very pertinent questions as far as the asset basis, because gone were the days where the IPOs can be sold alone on the basis of the brand or alone on the basis of just marketing skills. These days investors are very particular about the quality of the assets and the asset basis.
Hi, Jagannatham. Also, I'm just going to broaden that discussion and quickly go across and talk about Reliance Industries. What do you really make of that? We saw good gains yesterday, and there is also sources that are indicating that they're looking to sell about 3,000 crores of treasury stock. What is your call on that counter? And of course, there's also that expectation or general sense that they are pulling out of the Linden Bassel deal. What do you make of this? A positive for that counter?
Yeah, I mean, the Reliance has been in a range for quite some time, because not now, in almost, I think, last 6 months, it has been stuck in a typical 100 rupees range, plus or minus 5%, plus or minus 10% kind of zone. The deal being called off, maybe one way to speak, maybe may be a good, because it will at least lighten the balance sheet of the Reliance, because so many other groups who have done the global cross-border acquisitions have to gone through a period of pressure after their acquisition. So one way to speak, when so many opportunities are available in India, why to unnecessarily put $14 billion outside the country? So if we see in that perspective, I think a deal being called off or deal being postponed or delayed is not such a bad news. As far as the selling of the treasury stocks, I think it is just part of the series of treasury stock sales that Reliance has been doing, because they have piled up so much of treasury stock of late for last because of their so many in-house acquisitions. So now the Reliance must be seeing it as an opportune time to build up some money before any major expansion or major acquisition. So nothing wrong in making some such sale. But whatever from the stock point of view, it has stuck in very tight range in the recent past.
Jagan, broader markets, again, we have seen an important breakout for the Nifty. It's now well above its 50, 100-day moving averages. That's the technical part. But do you think that 5,000 is now perhaps becoming an important base for the Nifty, and the only way for the markets to move is higher, perhaps consolidate at the 51, 5200 level with a target of about 5,500 in mind? Does that view you share as well, or perhaps you think the consolidation phase could be prolonged here?
No, I think the consolidation phase will prolong because it's not now. I think almost 6 to 8 months we have been maintaining that the markets have stuck in very tight range. I mean, they are unable to decide because valuations have moved way ahead after the 2009 rally, and fundamentals are really not justifying. And the whatever the poison that was there in the system on the corporate balance sheets in terms of over leverage in 2008 has been translated into the balance sheets of the governments through stimulus packages. Now all that poison is sitting on the balance sheets of the governments and the statutes. That's why one after other, one country after one country is facing the problem. Started with Iceland, then Dubai, and then now Greece, and now even the Spain, Italy, and even some other countries are also looking very in a nervous zone. Recently, Moody's has even warned US that the AAA rating even for US sovereign is not a guaranteed phenomena. So if you see all these things, it is very clear that whatever the poison that was there on the corporate balance sheets, the governments have taken it with the parental care. We have just postponed the problem. We have not solved the problem because I don't think globally the conditions are that exciting to really go gung-ho about the markets, and I don't think valuations really justify the fundamentals. I think definitely market is in a undeciding zone, so pressure will continue.
Right, Jagannatham, in that case, how would you approach the markets? What a kind of a trading strategy would you be looking to initiate? And also I wanted to talk about two specific sectors, auto and cement. Both of them had a fantastic Feb. Going ahead, what's your call on these spaces? Would you buy into this story?
For patient investors, definitely there will be better opportunities, no doubt. I think just their patience is being tested not now for almost 6 months. So if somebody invests now, I don't think they will make any blockbuster returns because that's what we have discussed in the past as well. That because the upside is very limited. As far as automobiles, again, yes, I think if somebody is looking for established returns, the automobile can be a good sector because it is highly proxy to the economic development of any country. Having said that, automobiles have already rallied 300-400% almost from their bottoms. So one has to be very careful, and on top of that, even the sheer base effect can put pressure on the growth rates. So before approaching automobiles, also one has to be very careful. I think being conservative, I think still will be better. I think the good entry points are still around the corner.
Thanks very much, Jagannathan, for joining us this evening and talking what he calls the markets. Jagannathan clearly indicating that it's going to be a little bit of pressure going ahead for the markets. Global concerns will continue to weigh on investor sentiments domestically. Well, that is also all the time we have on the show. Thanks for watching. Up next, there's Profit Newsroom.